Hello and welcome to Startup Street. I'm Arundhati Ramnan, and with me as always is Shruti Mishra, and these are the top headlines from the startup world. AI-based brand analytics platform GobbleCube raises $15 million in a Series A round. This marks the startup's second funding round in a year. The round was led by Saskina Venture Capital with participation from existing investors Infoveg Ventures and K Capital, and the founders dilute 70% stake.
Fintech startup Poolka secures 130 crore rupees in a Series A funding round led by Axel India with participation from existing investors. This marks its second round of funding following a $7 million seed round.
Big tech continues to prune workforce amid rising investment in artificial intelligence. Facebook's parent company Meta announces a 10% cut in workforce, which will impact around 8,000 employees. Microsoft offers voluntary buyouts to 7% of its US workforce.
China's DeepSeek has unveiled the latest versions of its signature artificial intelligence-powered chatbot. This comes a year after its flagship model sent shockwaves through the global tech scene. The preview versions of V4 Pro and V4 Flash are being touted as capable of going toe-to-toe with US rivals OpenAI and Google.
The customer service agent startup Sierra acquires the YC-backed French startup Fragment, which helps businesses integrate AI into workflows. This marks Sierra's third acquisition.
Well, those were the headlines we've been tracking for you this evening on What's Brewing. From a COVID-19 lockdown insight to a fast-growing D2C brand, Invogue is tapping into a category that's quietly evolving from functional innerwear to fashion-led essentials. Bootstrapped and profitable, the shapewear startup is betting on products tailored for Indian consumers, balancing compression, comfort, and everyday wearability, even as competition heats up with well-funded entrants. With a strong direct-to-consumer engine and early signs of category tailwinds, the company is now preparing for its next phase of growth, expanding categories and preparing for external capital. Joining me now is Madhav Saxena, the co-founder of Invogue. Madhav, welcome to Startup Street. You've built Invogue as a bootstrapped D2C shapewear brand in a category that was almost invisible a few years ago. What was broken, Madhav, in the Indian shapewear market when you entered, and how are you solving for it differently?
First of all, thank you so much for that lovely introduction. Honestly, when we started a few years ago, everything around shapewear in India was broken. Rather than making someone feel good about their bodies, rather than making look good in shapewear, it was the complete opposite. People used to hate shapewear. They used to feel that, the bodies had flaws when they wore shapewear. And rather than being something that sort of gave them confidence, it just acted like complete opposite way. So that's what we figured, that, shapewear should be confidence enhancing and should not make you feel bad about your body. That's what we sort of found out. And that's how we essentially started Invogue, to ensure that people were confident in the shapewear that they wear.
All right, Madhav, your core pitch is high compression with comfort. These are two things that don't usually go together. How did you crack that product challenge? Also, you're competing with well-funded players and global benchmarks. Where do you win? What is your edge?
Honestly, comfort and compression do go hand in hand. It's just that other brands have not been able to figure that out. You just have to figure out where you have to give compression and where you have to give comfort. It cannot be all around comfort. It cannot be all around compression. You just have to find the perfect mix of comfort and compression, and trust me, it does wonders. We have worked across several iterations over the past 3 years to figure this perfect mix of comfort and compression, and our customers love it completely. And yeah, that's majorly why we are also able to succeed in this category, because honestly, our co-founder Ragni, she herself has lived the problem firsthand. So that's our unfair advantage and the edge over all other global companies, because they have not lived the problem of bad shapewear themselves.
All right, Madhav, you've scaled while staying profitable, even with significant spends on marketing. In a D2C landscape where many are still burning cash, what discipline have you enforced internally to make that work? And also, if you could share with us your revenue targets for the near term.
So it is like, unlike other brands, we often sort of aim to be profitable from the very first sale itself. We do not rely on customer coming back and, then us turning profitable. We always ensure profitability from the very first sale itself. And at the end of this financial year, we're aiming at a monthly revenue of 3 crores. So yeah, that's what we are aiming at.
Okay. All right, Madhav, you've said shapewear is moving from something hidden to something people openly talk about and even flaunt. How big is this behavioral shift, especially among Gen Z? Are we seeing shapewear evolve from occasion wear to everyday wear?
Absolutely. The behavioral shift is insane. Few years ago, when we sort of, went to an influencer or the celebrity or even a normal person to talk about shapewear, they would simply brush off the idea because they associated shapewear with shame. And they were never really ready to talk about it openly in terms of cultural context or whatsoever. However, we have built this whole cultural shift over the past few years, and now people are more than happy to talk about shapewear, flaunt it as an outerwear. We have Gen Z audience wearing it to concerts, parties, everywhere. So it's just beautifully, it has changed.
Okay. Madhav, 96% of your sales come from your own website. Why double down on own channels instead of marketplaces? And in a fashion-led business, how have you managed inventory so tightly while still keeping up with demand? You claim to have zero dead stock across 200 SKUs.
That's correct. So why we double down on our own channel is because we obviously get consumer behavior and the data of the consumer that's worth a lot, honestly. And while we are now also expanding aggressively on marketplaces, so we would be sort of seeing a different shift in terms of the overall channel split. And secondly, ensuring that we have no dead stock. That's because we are working in functional fashion and not just fashion. So when it comes to functional fashion, we are able to predict the demand and forecast our inventory requirements accordingly, ensuring that we are able to meet the demands of consumers and not sit on any product.
All right, you're now at an inflection point. I believe you're preparing for external funding, expanding categories and launching celebrity-led campaigns. How soon do you plan to raise funds and how much? Also, are you actively in talks with investors right now?
Yes, that's absolutely correct. They are already in the middle of raising a round. So we are raising a round worth 4 crores and we have already secured a significant portion of it. We recently launched a collaboration with Malaika Road and that has been very good as well.
Sure. And I believe there is a swimsuit shapewear in the works. How soon will we see this hit the market and what is the kind of demand you hope to see?
So swimsuit shapewear is something that I'm super excited about because as a category, essentially, we are the ones building it from ground up. No mainstream products currently exist for swimsuit shapewear. So we are sort of planning to launch it in the next couple of weeks. And we are very, very excited because a lot of our shapewear users have demanded a swimsuit shapewear. So we're super excited about this category.
All right. And finally, before I let you go, what's the one misconception about shapewear in India that still needs to be broken?
The biggest misconception that we have come across is that shapewear is just for curvy women. But that's not true. Shapewear is just like makeup for your body. So anyone who wants to accentuate their body, ensure that they look good in their clothes, can opt for shapewear.
All right, Madhav. We wish you the very best for all your aggressive growth targets. Thank you so much for joining us on Startup Street today.
Thank you so much.
And moving on the hot seat, as the AI boom accelerates, the real bottleneck is no longer in modules, it's compute. And across Asia, the gap is only widening. Nava, formerly Cluiz, is looking to tap into that opportunity. The company has raised $22 million in a Series A round led by Green Oaks as it sets out to build a full-stack AI cloud platform tailored for next-generation workloads. From GPU compute to AI-optimized data centers and orchestration layers, Nava is betting big on a vertically integrated model to power enterprise AI adoption across the region. Now, with Singapore as its new headquarters and expansion plans across APAC, the company is positioning itself as a foundational infrastructure player in the AI stack. Joining us now to talk about the road ahead is Abhinav Sinha, the co-founder and CEO of Nava. Abhinav, thank you so much for joining us on the show today. You're sort of building this in one of the most capital-intensive spaces, right? AI cloud infrastructure. What was the gap that you sort of saw in Asia that convinced you there was room for a new neo-cloud player?
Thank you for having me on Startup Street. You raised the most important question. I think there is a very important context around this. Of course, AI infrastructure is becoming foundational to sovereignty. Geography-wise, every geography needs to look at how much compute software, compute plus software do they have. Compute gap is the most significant at this point of time. Start looking at overall compute. In the US, you are looking at about 100 megawatt per million population. You come to India, you are looking more like 1 megawatt per million population. So US itself is on an aggressive spree of adding compute capacity, especially GPU compute capacity. And if you look at that, they may end up in 5 years from 100 megawatt per million population to about 150. So if India has to match or even come close, we have a large gap to bridge. And this is not just true for India, this is true for many countries in APAC outside China.
Sure, and you've also rebranded, right? You've undergone a rebranding exercise, and you've gone from Cluis to Nava, and that was alongside this fundraise. What sort of drove that change, and does it signal a broader shift in positioning as you move from an AI native cloud product to a full stack infrastructure player?
Yeah, so we started building on the software side first. We were building AI native orchestration. We were looking at inferencing software. And now we have expanded our vision significantly to actually build on the GPU compute layer. So we are now building AI native data centers. We are setting up and building GPU compute clusters as well. Nava, as you know, in Sanskrit means new. So Nava now denotes our grown ambition and the intent and the speed with which we want to move. So that's why, one of the core reasons we moved from Clues to Nava.
All right. And now that you're positioning yourself as this full stack vertically integrated AI cloud from data centers to orchestration, how does this differ from existing hyperscalers, and where's your edge?
See, compute capacity, the need for compute capacity is moving already from training workloads to inferencing workloads. Inferencing workloads have an edge if you are closer to the customer. So this needs to be built across the world and not just in the US or in Europe now. So there is an ample opportunity for everyone to actually build closer to the customer. We believe our software first DNA provides an edge for us to think about the entire stack and integrate and build it fast. So speed will be another differentiation that we will bring to the table. But yes, it is more about learning from the ecosystem and adding on top of it. And we believe the ecosystem has a lot to offer in terms of where you can differentiate today.
All right, and you've got this $22 million coming in, right? Where will you deploy capital most aggressively? Capacity build out, GPU infrastructure, or your go-to-market across the APAC region?
We will start, of course, we've already started building out the team. We are looking at building the team in Bangalore, also setting up our team in Singapore. We are looking at hiring across GPU orchestration, across AI data center architecture and design, roles related to power, liquid cooling. So a bunch of these, infrastructure and software related roles. We are also looking at expanding operations beyond India to different countries in APAC, as you mentioned rightly so. And finally, most critically, we are setting up our first couple of GPU compute clusters, and this capital is all going in these areas.
All right, and we're sort of seeing this massive surge in AI demand. How big is the infrastructure gap in Asia today, and how urgent is this need for enterprises? And if you could sort of tell us, where does India fit into your growth plans?
As I was alluding to, the infrastructure gap is pretty significant. You can look at, this geography. If you have to match where the US would be in 5 years, you could be talking about a gap which is maybe 100x from where we should be in 5 years' time. I don't think it's possible to reach everything in 5 years. But I think India, as well as other countries in APAC, should be looking at maybe a 10 to 15-year period and getting to maybe 75 to 80% of the capacity per person that the US has or US will have in the future. So this is going to be significant, not just to fuel the requirement and fuel the growth that you are seeing and the demand that you are seeing from the customers here, but actually to also build the most relevant software layer on top, the most relevant orchestration layer on top, whether cloud or end application layer. You have an edge if you own significant compute capacity at this point of time. So there will not just be a sovereign angle in really being self-sufficient in terms of compute capacity, but also in terms of what edge your cloud or applications have that will be driven by how much underlying compute capacity you have.
Absolutely. But one of the biggest barriers remains the cost of compute, right? Especially for startups in India. How are you sort of thinking about pricing to make AI infrastructure more accessible while still sort of maintaining your margins?
There are a lot of dimensions around which you can innovate. I think the cost of GPUs, of course, remains 65-70% of the underlying cost, and that pretty much remains consistent across. When you start looking at underlying cost of land, power, and then the talent that sets up everything, that's where you can bring differentiation. But you can also bring a lot of differentiation in terms of how your software uses your underlying hardware, how the power, liquid cooling, and all the services basically drive efficiency in the underlying GPU infrastructure. So there's a lot that you can do to not just be the best in terms of what you can offer, let's say from an inferencing cloud perspective, but also do that at the cheapest cost, right? So there are both these dimensions around which a lot of innovation is possible, but that does need investment on infrastructure. I'm very excited to see the government being very open and very forward-looking in making these forward-looking bets. So yeah, I think next 5 years are going to be critical for India and also other countries in Southeast Asia in this journey.
Absolutely. And finally, before I let you go, what's your monetization strategy at this point? Are you looking at a pure compute as a service model, enterprise contracts, or a more sort of platform-led pricing structure?
We are different here because we are a software-led player. So we'll be looking at our own inferencing cloud, also looking at providing GPU cluster as a service to wherever large cluster demands are needed. So it will be a combination of both, and it will depend upon the type of opportunities we see in specific geographies around specific clusters.
All right, sure. All right, thank you so much for taking time out and being here with us on Startup Street. And Abhinav, we wish you all the best on this journey going forward.
Thank you so much.
Well, with that, it's time for us to head into a short break. But coming up, India is becoming central to AWS's global cloud and AI strategy. A special conversation on the other side. Stay tuned.
Welcome back. You're still with us on Startup Street. India is becoming increasingly central to AWS's global infrastructure play as the company steps up investments in capacity, talent, and AI capabilities in the country. Speaking to CNBC-TV18's Meghna Sen, Prasad Kalyan Raman, Vice President at AWS Infra Services, explains why India is among a select group of markets with multiple AWS regions and why the company is committing billions of dollars to scale its footprint.
We've actually had a long history in India, right, for over a decade now. Started off with our Mumbai region, and then we actually built the second region as well in India. And India is actually one among the very few countries. It's one of literally 6 countries where we have more than a single region. Now, these regions are full-fledged regions. They're regions with 3 availability zones, fully featured set of services. For regulated customers, they wanted the second region as a disaster recovery region, and so it satisfies those needs. But for all the other customers, they're actually able to launch their applications both in Mumbai as well as in Hyderabad, depending on their latency requirements and so on. But the same invariants about high levels of security, availability, and performance are actually universally there across all those regions.
So as you mentioned, we have seen AWS's investments in Mumbai and then in Hyderabad. So are you planning to expand the data center footprints in India with new regions or clusters, especially as other conglomerates, they are also scaling up their infrastructure investment?
Yeah. Well, look, as I said, India is a huge location for us from a growth perspective. We've been very, very fortunate with how customers have relied on us. Like you look at customers across, I talked about in the keynote, I talked about Swiggy and talked about Wipro, Zomato, who's actually released that Nugget app, and now it's expanding it across many other customers as well, or Apollo Tires and so on. So lots of customers across pretty much every single vertical has been using us in India. Like any other region, we're constantly listening to customers, and we have some pretty aggressive growth plans in India, and we will continue to do so. And if you look at our investments, we actually said that we're going to be investing about $12.7 billion by 2030. It's a pretty significant amount of investment.
Also, what do you make of the AI scene in India? Are you seeing those kind of energy levels that you usually see in the US?
Absolutely. I think India is one of the things that is great about India is it boasts a really good, robust energy infrastructure. And a transmission infrastructure. So, you have companies across the board who are ready to actually lean in forward with us. I actually think that, India is a pretty strong advantage in terms of its energy infrastructure, both in form of like renewable energy as well as access to network, access to land, access to a strong labor force that can build infrastructure at scale that we want. And I think India is very privileged in that sense. And I think, overall, the general public plus the governments are leaning forward and noting that AI infrastructure is going to be key for the next generation as well. You look at Sarvam and you look at what the public sector is actually investing in. It's quite encouraging to hear.
Can you also guide us through the CAPEX plan in AI infrastructure investment at AWS? And if yes, what would be the primary source of funding?
Well, this is in Amazon's DNA. When we actually find that there are areas that we think that it is worth us investing, and when our customers tell us that they want us to be investing in this area, we actually lean forward, right? And so Andy talked about his investments close to hundreds of billions of dollars. You see our investment in India as well, like $12.7 billion. All of Amazon is going to be investing about $35 billion by 2030. And that's in addition to the $40 billion that we've already invested. I think when you actually have a huge opportunity like GenAI, which is in front of us, we lean forward on those kinds of investments. We've never been shy about investing that badly. If you look at many years back at our investments in Amazon.com, people used to ask us the same questions, like, how much are you guys investing in it? And look where we are. It's a household name on what Amazon.com is. And same thing with AWS. Like, there is literally virtually no industry that is not actually onboarded onto AWS. And if you look at our earnings as well, it's actually quite staggering. We've actually grown in the last quarter 24% year over year with a $142 billion run rate. And that's, literally in the last 13 quarters, that's the highest growth rate we've seen. So we're accelerating growth.
It is Friday, and it's time to take stock of the startup deals this week. As per Venture Intelligence, 20 startups raised nearly $80 million. Some of the notable deals include credit management platform Ulka raising $14 million from Axel India, Lightspeed, Z47 and others, while gaming startup Light Fury Games secured $11 million from Bloom Ventures, Mixi and V3 Ventures. Meanwhile, M Home Automation is set to secure $11 million from Bloom Ventures and Peak 15 Partners.
And some of the other deals include ice cream chain Hoko raising close to $11 million from Sauce VC, while textile tech startup Stitch AI raised $7 million from K Capital and Omnivo Partners. Year-to-date, 2026 has seen a total of 314 deals worth $2.93 billion. And with that, it is a wrap on this edition of Startup Street. From Shruti and me, goodbye and many thanks for watching. More news and updates coming up on the other side. Stay tuned.